In this video, I am going to explain how to trade assets like US stocks, gold, Forex, and indexes on Bybit. I am going to walk you through the entire process and also share some tips and strategies I use personally when trading. For a very long time, Bybit has been the main platform I use to trade cryptocurrencies. So let's say if I want to trade Forex or buy stocks, I will have to use a different platform. But recently, Bybit launched a new feature called TradFi that allows you to trade global markets directly on the Bybit app using USDT. This will make things easier for traders because instead of jumping from one platform to another to access different markets, Bybit gives you all of them in one place. Let's check the Bybit app and see how it works. If you don't have a Bybit account, I'll leave a link in the description that you can use to set up a new account for yourself. If you create your Bybit account with that link, you can enjoy rewards up to 1,100 USDT when you start trading on the platform. So sign up, verify your account, then go ahead and open the Bybit app. Once you come over here, go to trade. Now you will see this TradFi option. Click on it. Here, the first thing you will need to do is to apply to start trading TradFi. So click apply. I will check the terms of service, then click continue. If your account is not yet verified, Bybit will ask you to verify your account. But at this point, I'll go ahead and click confirm. Now my account is ready to start trading, but first I'll need to add USDT to my TradFi account. If you have USDT in your Bybit funding wallet or your unified trading wallet, you can easily transfer the amount you need to your TradFi account. So if I click transfer, you can select the wallet you want to transfer from, either your funding wallet or your unified trading account. Let's say I'm going to use my funding wallet. If you don't have any USDT on Bybit, you will need to deposit or buy through P2P. I have a video that will show you how to do that. The link will be in the description below. Then we are transferring to our TradFi account. The coin one transfer is USDT. Then you can enter the amount. Let's say I want to transfer 100 USDT. Then I'll click confirm. So right now you can see that I have 100 USDX in my TradFi account. USDX is the USDT version of TradFi. So it's still the same 100 USDT, but on TradFi. Now I can start trading all these different markets. You can see that I can trade metals, gold, silver, and stuff like that. I can also trade US stocks, indexes, I can trade Forex and commodities all on this one platform. Now, let me clarify that there are two ways to trade US stocks on Bybit. The first method is through spot, and here you can buy, hold, or sell US stock tokens. You are not buying the actual shares, but these are blockchain tokenized versions that follow the actual price of the real shares. Let's say I want to buy Apple stock. Here, you will just enter the stock symbol for the asset you want to buy, which is APPL for Apple. Then it will show up as APPLX. And let's say if I want to buy Tesla, I'll just enter the stock symbol for Tesla, which is TSLA, and then you'll see that TSLAX will show up. This is how Bybit represents all these different stocks. Or let's say I want to buy Nvidia stock. This is it. I'll select it. Now you can either buy or sell. The idea is you want to buy and hold, then sell when the price goes up to take a profit. And right now, let's say I want to buy 100 USDT worth of Nvidia stock. Make sure you set this to order by value. Now I have 100 USDT, then I'll go ahead and click buy. Now to see how your stock is performing, go to assets. Here you see that I have one Nvidia order and I'll be able to see the performance from here. If you want, you can also check the charts to see how the stock has been doing over the past 1 hour or 4 hours or one day, depending on the time frame you want to see. Now, assuming that the price of this stock has gone up to the point where I want to sell and take my profit, I'll come over here, select sell, enter the quantity of the stock you want to sell. If you want to sell everything, you set it to 100%. Or maybe if I want to sell just 50% of my stock, I can adjust this to 50%. Or if you want to enter the dollar value, you can select order by USDT, then enter the amount right here. And with this in place, you can go ahead and click sell. Or if you want to place the sell order when the price of the stock gets to a particular level, you can select limit order for this instead of market order, and then select the trigger price, enter the amount you want to sell. Let's say I want to sell when the price gets to $200. I will set this up like this, then click sell. Now Bybit is going to wait for the price to go up to 200 and then execute the sell order for me. Right now, the stock is going down currently, so I'm going to wait a little bit and see if there is a reversal before I sell. Usually, you want to buy low and sell high. That's how you make profit from spot trading. So this is one way to trade US stocks on Bybit, where you can actually buy and hold the assets, then sell whenever you want. Then the second method is on TradFi, and here you are trading the price movement of the stock. It works the same way with crypto futures trading. You can long when the price of a particular stock is going up, or short when the price is going down to make profit. And you can do the same thing for the other markets as well. Right now, the stock market is closed. As you can see, most of these are closed. So let's say I'll come over to Forex, select any of these currency pairs. Let's say I want to long, I'll click buy. Then you can either enter a market order or like a limit order where you wait for the price to get to a particular point before you execute the trade. So let's say I want to enter a market order, then here enter your lot size. Each currency pair has a minimum lot size. And for this, I think it's about 0.01. Anything below that is not going to work. Then you can also set your take profit and your stop loss. Once you have your setup, you can go ahead and click buy to enter your long position. The process is very similar if you want to take a short position. Just come over to sell and then enter your lot size, set your take profit and stop loss, then click sell. Now, remember that we don't want to jump into trades blindly. You need a good strategy if you want to become a successful trader. So let me show you one effective strategy I use for myself. I usually use TradingView to analyze my chart, but you can use any one you prefer as long as it has the tools I'm about to show you. Like you can also use the chart right here on Bybit, but right now I'll just use TradingView and I have selected gold USD. The time frame is set to 1 hour for me, but you can use any time frame you like to trade in. And once you come over here, the first thing I want you to do is to spot the trend. You want to identify whether the market is trending upwards or trending downwards. This is very important because we always want to trade in the direction of the market. So if the market is trending up, you want to look for long positions. And if the market is trending down, you want to look for short positions. Try as much as possible to avoid entering trades when you are not sure which direction the market is going. For instance, what we have here is more of a ranging market. So buyers and sellers are struggling at this point. That is why I will not advise you enter trades in conditions like this because it is very hard to predict which direction the market is going to take. So how do you spot a trending market? If you look at your chart and you see that the market is forming consistent higher highs and higher lows, that means the market is going up. But if the market is forming consistent lower highs and lower lows, that means the market is going down. For instance, here the market is trending up because you can obviously see that the wick of the lowest candle at each swing is higher than the previous week. So this particular area is higher than this, and this is also higher than this. The same for the higher candles. You can easily see that this particular area is higher than the previous one, and this is also higher than the previous one as well. So once you spot a trend like this, you can easily draw your trend line to connect the lower lows. So we're going to have something like this. Now you can basically reverse this process to spot a bearish market. In a bullish market, the trend will form higher highs and higher lows, but in a bearish market, when the market is going down, the trend will form lower highs and lower lows. For instance, let me show you an example. In this area, we can see the market trending downwards because we have lower highs. This area is lower than this. This area is lower than this. Same for the lows. We have lower lows. This area is lower than this. This area is also lower than the previous one. Then we are going to draw our line to connect the lower highs. So you probably have something like this. Now, the next thing you want to look out for is your closest support for a bearish market or your closest resistance for a bullish market. Here we have the market going down. So the closest support is this particular area. We see that the price came here, bounced back, came here, then bounced back again. So I'm going to use a rectangle to draw my support area. We're going to take this like this. Now, what you want to do in a trending market is to wait for the price to bounce off your line before you enter your trade. For instance, let's assume that I'm observing this market at this area. So I saw that it formed a lower high. So I'll wait for the price to bounce off the line again before I enter. And that is going to be this particular area. So the price bounced off at this point first, and then it bounced off again. So this is the area where I want to take my short position. But before you enter any trade, make sure you look out for multiple confirmations. For instance, here you can observe that the bullish candles are losing momentum. So it is very likely that the price will keep going down because buyers tried to push the price up, but it kept failing from here up to the point where it bounced off our line. And even after that, you still need to observe the first few candles. If there is a lot of indecision in this area, you need to wait a little bit. But if you see that sellers are gaining momentum, that's a good sign for you as well. But we still need one more confirmation before we enter a short trade at this point, because the market will always want to trick you. So you think the market will go in one direction, then it turns around and go the exact opposite direction. So to avoid that, we are going to use RSI, come to indicators, and then just search for RSI. You'll see it right here, relative strength index. Just add it to your chart. Now open the settings, go to style, and uncheck upper band and lower band. We need just the middle band. Click OK. So what you need to keep in mind here is that the purple line is the RSI line, while the yellow line is the RSI moving average. If the RSI is above the middle band, which is this dotted line that you have in the middle, if the RSI is above the middle line, that means the market is more likely to sell. And if the RSI is below the middle band, that means the market is more likely to buy. And if it goes beyond 70, that means the market is overbought and will likely start selling massively. Or if the line is below 30, like in these areas, that means the market is oversold and will likely start buying massively. Now, the way we use this is if you want to take a short position, but you notice that the RSI is below the middle band, that's not a good time to enter the trade. You want to wait for the RSI to be above the middle band. That will save you from falling into the traps of false breakouts where the market acts as if it is going down, then all of a sudden it starts going up. The same applies if you are taking a long position. If you're about to enter a long position, but the RSI is above the middle band, that's not a good time to enter. You want to wait for it to be below the middle band because that's when you know that the market will likely start buying. So this simple confirmation will save you from picking a lot of false signals. Now for the trade we wanted to enter, we can see that it has bounced off our trend line and then the RSI is also above the middle band. You also want to see the momentum of the market, whether the momentum is bullish or bearish. So we've done all of that confirmation and I am willing to take a short trade. What I'm going to do is I'll probably enter from this point. Then you want to set your take profit just before the closest support, because once the price gets to the support, it is very likely that it is going to bounce off. And then for your stop loss, you want to set it slightly above the previous swing, which is this area for me. If you've actually confirmed that the market is trending downwards, then it is very unlikely that it is going to pass the previous lower high. But even after all your confirmations, you still need to remember that the market can always go against you. In that case, you want to set your stop loss in an area that will minimize your loss. So here we know that if it breaks beyond the previous lower high, it might keep going up from there. So you just want to close your trade at that point to avoid further losses. With this point, you can see that we have a risk reward ratio up to 2, which is very good. Usually you want to target 1.5 to 2 risk reward ratio. That way, you don't need to win all your trades to be profitable. And from the way this trade played out, you can see that it actually came and hit our take profit. You can use this same strategy when taking long positions as well. Like here where we have a bullish trend and we have multiple confirmations of the price hitting our line before bouncing off, we can take a long position from this area. So again, identify the closest support or resistance. And in this case, we have the resistance here. So here you see that the price came here, bounced off, tried again and bounced as well. Then at this particular point, you can also see that the RSI is below the middle band. So everything looks like the market is going to trend upwards from here. So we are going to enter a long position. And what I'm going to do is probably enter from this particular point because I like to wait to see 1 or 2 candles close, and that will tell me which direction of the market has more momentum. So I'm going to enter from this point, drag your take profit just a little bit before the closest resistance, and then set your stop loss slightly below the previous higher low. So that would be this area. And with this, we are getting a 1 to 3 risk to reward ratio. So I'll probably just push it up a little bit, take it to 1.5. Even if I decide to use 2 risk to reward ratio, you will see that it eventually hits our take profit. I have used this simple strategy consistently and it always gives me high win rate. If you want to take advantage of my trading strategies, you can join my Telegram channel where I share trading signals and real-time updates. The best part is access to my channel is free and the link to join will be in the description below. Now, another way to start trading is through copy trading, where you basically follow the trades of more experienced traders. And the process is also very easy on Bybit. Just come over to the TradFi section and here you see copy trading. If you click on it, you are going to see top performing master traders that you can easily copy their trades. And you can look for top traders in different categories. Let's say you want to follow a master trader with high ROI, you find them here. Master traders with highest follower profit, you find them here. And this is the category I'll actually recommend because these are the master traders that are making the most profit for their followers. So you can pick any of these traders, check their stats and see how they are performing. Here you see their return on equity, their win rate, the max drawdown, masters profit and loss, followers profit and loss, and stuff like that. Bybit is making sure that you have all the data you need to make the best possible decision. And once you find a trader that you want to copy, you can click on copy. Here you see the minimum amount you can use to copy this particular trader, enter the amount you want to use. Then you can set your take profit and your stop loss, check the trading agreement, then click copy now to start copying that particular trader. Another thing you want to take note of is the profit sharing ratio. Now, when the trade results in profit, the master trader will take a certain percentage. This particular trader, for instance, has a 15% profit sharing ratio. So let's say I copy their trade, they are going to take 15% of every profit that I make. So I hope you found this video helpful. If you have any questions, drop them in the comments. I'll be there answering your questions. And don't forget to like, subscribe, and ring the bell so that you'll be the first to know anytime I drop a new video. Thank you so much for watching, and I'll see you in the next one.